Hello everyone and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to this special weekday episode of Motor Trade Radio. We're delighted to welcome back Jeremy Yea, Senior Valuations Editor at CAP HPI, joining us for his roundup of how used car trade values performed over the course of March and Q1. So welcome back to the pod, Jeremy. It's been a little while. How's life in the world of used car valuations?
Yeah, morning guys. Yeah, really good actually. I think it's been a reasonably stable and positive start to the year, which I think most people are probably glad of, given the turbulent time of the last 3 or 4 months of last year. So yeah, pretty good.
Yeah, it's nice to get off that roller coaster, isn't it?
Absolutely.
Never a dull day, Jeremy?
Absolutely not.
Always busy. I mean, as always, let's start off, talk us through the headline movement for the month at 3 years 60, which is down 0.1%, which is approximately £70, and how they fit into the movements over the course of the first quarter.
So yeah, as you just alluded to there, a 0.1 drop within the March going into April monthly figure, which is just marks a really stable month for used cars, certainly at the 3 years, and it fits in quite nicely, I guess, with quarter one. Quarter one is overall positive for the first 3 months of the year, with a small increase, which I guess we'll go through in a minute. But yeah, it's been a real stable and solid month, I would say, extended on from January and February.
And was there much fluctuation over the course of the month? Because obviously, we talk about the month end, that snapshot in time for the monthly book, but we know that you're monitoring the values daily, and that sometimes gives you a bit of a story as the month progresses, because we've gone quite very quickly towards the Easter period. Did you see much fluctuation through the month and how the month sort of panned out?
Not really. The month started off obviously flat in terms of the movement, so a 0% movement. It took a while to get to 0.1% down, and I think the highest it got to, or the lowest it got to, was 0.2% down, but fluctuated in between sort of 0.2 and 0.1 over the course of a few days. So we didn't see any sort of heavy movements downward or upwards. There is some, obviously, difference in terms of some of the fuel types and whatever, but the overall headline movement didn't really move. It was pretty static.
Yeah, and I guess that goes back to what you were saying, Jeremy, about this sort of welcome stability that's sort of creeping into valuations. Looking at age bands specifically, were there any notable trends over the course of March?
So I'll start with a younger age point. So 1 year dropped equal to 3 years, actually, at 0.1, which is around 157 quid at 1 year. And as Phil said earlier, it's circa £70 movement at 3 years. It's the older age points, certainly around that 10-year age point. 5 years was reasonably stable. There's probably a bit condition related in there, but that dropped 0.7. And overall, that was about nearly £90 movement. But it's the 10-year 100k, which is pretty volatile, I would say. It's just probably sum it up. There's some good and bad within that older age group, but generally older cars have come under more pressure. I think there's an aging car park in general where obviously we've had a lack of new car registrations over the course, and that cycle of new cars coming through over a 3 or 4 year period. And that's definitely evident now, where people have probably held and retained cars for longer. They've collated more miles, they've collated more damage. And I think that's equal to a sort of a more negative movement going into throughout Q1. And I think some of those damaged and mechanically challenged cars have been, they've been sold, but been sold on prices and probably nowhere near to even clean or average figures.
Yeah. And how did the various vehicle sectors perform? I noticed it was a strong month for city cars, wasn't it?
Yeah, City car, continuation of City car. So that went up 1.1% overall, which equates to about 80 quid at 3 years. We're convertibles, seasonality, they've gone up a little bit more as well. Not mainstream, but I will highlight, they've gone up between 1.6 and 1.7% overall. A small movement in terms of pound movements. The mainstream sectors are sort of the small to medium car. Super Mini dropped 0.2%. So again, a relatively stable month, I would say, for Super Mini. Lower medium dropped 0.3. SUVs, interestingly, were flat overall. There is some, I guess, breakaway in terms of size. So the small sector of SUVs dropped 0.3, medium was up 0.3, and large was down nearly 1%. So there is some different variations, and what we've seen is quite a lot of variations within all categories or all sectors, which has kept us busy. But overall, the headline figure is a very stable month.
And that's looking specifically at March. Were there any standout observations across age and sectors over the course of the quarter?
So quarter one, if you include a plate uplift, because March will give a plate uplift, which is a sort of circle around 2%. If you include the plate uplift, it's a 2.7% rise over the whole of the quarter. So January, February, and March. So that would be February monthly, March monthly, and April monthly if we've just produced now. If we exclude those, if we exclude the plate uplift, it's about 0.5% overall. So again, really highlights that stable and slight increase overall. I guess in terms of the fuel types, it was a little bit sort of fragmented and a little bit different. But overall, petrol and hybrid seem to be the ones which are in favour. I think they're probably maybe a little bit more known and easier to sell for some dealers. Diesel took a small drop, with EVs dropping down just over a couple of percent overall, along with hybrid, which a little bit under pressure as well, at 0.7 down. But yeah, overall, it looks pretty good, I would say.
And you mentioned fuel types there. I mean, any notable significant movements? I mean, EV's the most obvious one that is very volatile at the minute, depending on the make, the manufacturer, etc. Is there anything sort of standout movements on EVs by make and model that you've observed?
Yeah, I would say at 3 years, the one which went down the most at nearly 7% was the Toyota BZ4X. That went down, so nearly 7%, and just over £670. So that was a reasonably big movement. A fairly new entrant to the market. Even though it's marked at 3 years, you won't get a 3-year-old one. They're probably more likely to be a couple of years old. But still, when it comes into our valuation process. ID3, that's down just over 6%. So again, that still continues on a little bit of a decline, down nearly £900 for the month. And C4 electric, that's down 6%, and down just over £600. That said, we did have a small handful of EVs which did go up, which is, I would say, unusual when you're looking at everything in this entirety. BMW i3, that went up, i3E, I should say, that went up nearly 1% to £240. Kia EV6, that went up nearly 1% at £217. Mercedes EQA, that went up by 1% and nearly £200 as well. So not everything has gone down.
And we talk about the fuel types to petrol being the most obvious one in terms of the increase, and then you've got your hybrid, and then your diesel, and then the EV. Is there anything sort of over that first quarter? Is that a continuation that you've been observing recently in the months? Is it kind of this constant now between the fuel types, where the most obvious one is EV that's feeling the majority of the pain, followed by your plug-in hybrid markets and stuff like that?
Yeah, definitely. I mean, petrol is not the strongest fuel type. Before I opened up the report earlier, I thought it may have been the strongest fuel type overall. It's not. It's hybrid. Hybrid's actually the strongest. And, this is with plate uplift excluded again. That's up 2.1%, just hybrid. But petrol's not far behind. It's at 1.4%. With EVs going down a cumulative 5.8% overall during that same period of the first quarter one. So there is a difference between the two. So I think the good remains good, and I'm not going to say bad, but the more challenged vehicles continue to be a little bit more challenging in the retail sector, I'm sure, and in the trade sector.
You're listening to All the Chatter That Matters, a special weekday episode of Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising.
And Jeremy, every month you poll the views of the auction houses. What were they telling you about stock levels and demand compared to February?
So, being March and being a cycle of new vehicles going into the market, and that obviously the return cycle increasing, there was an increase across most of the auctions that we surveyed, showing an increase from February into March, with half the responses, or half the respondents saying that it went up. I would say, pretty significantly, with 36% actually saying that it stayed the same. So, there was only a small minority. I think it was 14% of our respondents said that it had actually dropped or lowered for them from February to March. It was a little bit surprising, but they might not be maybe sort of heavily reliant on fleet sector and what have you. So, definitely an increase in stock, but this didn't dampen down, I guess, demand from buyers, which is good. I think it's really well matched and well balanced at the minute, which is keeping the market in a pretty good place.
And did you see any evidence of dealers stocking up ahead of what is an early Easter?
I wouldn't say dealers are stocking up. I think they're buying to replace what they've sold.
Yeah.
I don't think anyone's been stocking up as they've probably done in usual change cycles around, certain seasonalities. That I don't think that probably exists. Certainly this year, I think they're just replacing what they've been selling.
Yeah, and I guess the further complexity of certainly on the franchise side with the plate change in March. So a lot of dealers would have PXs coming in anyway.
Yeah, they'll have lots of cars going out the door. I think, parts of the new car market has been pretty buoyant. So there will be that cycle of part exchanges, but also, they've been selling quite a lot of used cars as well. So, I think it's probably a mix between the two.
And time for the crystal ball, Jeremy. So it's, and I know it's, getting more and more difficult to predict these kind of things, but, what is CAP HPI view on how prices will perform as we enter April, and what will some of the dynamics specific to sort of, following the March values mean in terms of, are we going to see higher volumes of corporate and lease D-fleets? They've got the part exchanges coming in for the month of March. There's a lot of focus on manufacturers, should we say, pushing EVs into the marketplace as they chase the ZEV mandate in the UK. What's your thoughts as we enter into the second quarter in the month of April?
I think overall, something similar to what we've seen. I think we're probably likely to see, and I mean that in terms of seasonal moves. So I think in our short-term forecasts, we've predicted sort of around an overall 1% drop, which is actually slightly less than the seasonal average. The seasonal average pre-COVID, this is going back about 5 years pre-COVID, is about 1.5% roughly. So we forecast it at 1%, which I would say that's on the strong side of previous performance. But I would say, around 1%. It wouldn't surprise me if it was a little bit less. It wouldn't surprise me if it was slightly more, but maybe no more than the average drop. I think, there is demand out there. Yes, we're going to get some absentees from the market, both buyers and consumers, and that maybe will lead to slightly less sales across both, trade and retail platforms. But overall, there's going to be an influx of stock. We've already started to see that. There's going to be more vehicles coming in from those more normalised change cycles now, and I think, but just in line with pre-COVID sort of averages, I would say. I wouldn't say there's going to be anything untoward. Hopefully not. I mean, obviously we'll report what we see at the time, but again, that crystal ball is very, very difficult.
It's a bit murky, is it? That crystal ball, is it getting a little bit?
It is. I think we beginning of this month we thought that the market would carry on and increase again, and that didn't happen. So we didn't get it wrong.
It's a bit of a polish, doesn't it? Yeah.
Yeah, exactly.
No, I know it's difficult because I think that the things are changing so quickly, particularly with things that are out of normality in terms of controlling the election year and everything else that's going on. But I don't know. I think for the minute it feels like we're in a period of probably stability, bit of normality, as you might put it. I don't know whether we can say it's returned to normal, but a little bit of normality when it comes to seasonality.
It feels more normalised than it has done for a long time. And I think we've all forgotten what that is because everything's clouded with COVID and, change cycles not being anywhere near what they, previously been. And it's just, we've been in a probably quite a funny place, positive, very positive at times, and then obviously very negative at times, if you've given the last 3-4 months of last year. So, like I said, this is probably a bit of a welcome sort of, return to stability, seasonality, and long may it continue for the trade, because I think this is what retailers and certainly vendors need at this time.
Yeah, like you say, the retailers just need that stability just to get that sort of confidence to return to the market. And as you said earlier, start to stock up a little bit, start to get back in and start to increase their stock levels a little bit.
Yeah, I think people have been running lean for quite a long time now, and they've seen maybe some benefits to that in terms of obviously with stocking charges and interest rates, being abnormally high compared to for the last 16 years, and with no drop again in interest rates from what the Bank of England announced recently. So people were still going to continue to be cautious and careful, but I think people still need cars to sell, and whilst retail demand remains as good as what it has done for the first 3 months, let's just hope it continues through this period. It's going to be like a little drop, I would have thought, but hopefully nothing untoward.
No, I mean, it remains to see. I mean, as you said, I mean, it's keep an eye on a daily basis of what's happening through the live, and you're trying to obviously keep the market as updated as you can on a regular basis. So it's appreciated you coming back on the podcast today, Jeremy. I know it's always very insightful, and I know the listeners really do appreciate taking that little bit of a sort of a deeper dive, putting a little bit of context behind those headline figures and some of the trends in the market. And for anybody who hasn't got the editorial, then you can find it on the cap-hpi.com website, where you'll find the full published editorial along with all the comments and other editorials for LCV and bikes. It's out today. And you'll probably see it in through the LinkedIn feed. So I know, Jeremy, you'll be sharing it through your LinkedIn feed today, plus your social channels and the Cap HPI one. So, no, thanks again for coming back on to Jeremy. It's much appreciated.
Pleasure. Thanks for having me.
Yeah, great to have you back on, Jeremy. But that's all for this special weekday Motor Trade Radio podcast. We're back with all the big car retailing headlines this weekend. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.